Good morning, traders and investors. Welcome to July 1st. My name is Roger Scott, and I'm the Senior Strategist of 𝗧𝗴𝗀𝗲. Can you imagine we're already in July? The first half of the year is gone. I remember talking about what's ahead for 2021, and here we are. June is over, and we're almost halfway through the summer, if you really think about it. I mean, June, July, August, and that's it. So enjoy it, appreciate it, and have some good time. I just came back last night. I was actually in the Caribbean. I was in Bahamas, but I am now back at my lab. So let's get into it, as I always say, right now. E-mini S&P random. I always start out with this. The market's going to go open up in about an hour and 20 minutes. Not much right now. The Dow's up 70 points, which is just a hair above random. Anything 70, 75 or lower is just random on the Dow. Nasdaq is down 9. S&P's up 1. This is not a really... This is more of a fragmented market. There's just not much going on right now. If you look at the bond market, it's down quite a bit overnight, and it looks like, as I was saying, it looks like we're just going to revert. Remember what I told you a while back? We're just going to drift. There's not going to be a big trend, and interest rates are going to go higher towards the end of the summer. Now, the Fed made a lot of statements about shortening their timeline. Now we're talking about 2 hikes potentially into 2023, maybe even sooner, so forth. But as you can see here, the bond market is just cooling off, and it looks like it's coming back to the blue line. That's the 50-day moving average. The closer this comes to the blue line, right, the higher rates get. The further this gets away higher from the blue line, the lower rates get. So there was a lot of hope that rates were going to go lower, as you could see right here, and I told you it's not going to happen. Fed's not going to take any action. They're not going to push away the bond purchasing. It's not going to happen. It's just not going to happen, and it didn't. And we're still where we're at. And I think maybe towards the end of August, maybe another 2 months, 60 days, I think interest rates are going to start heading down, and we're going to start heading right here, or actually breaking this level and breaking the 133 level. But I think for the foreseeable future, we're just going to see sideways trading action. We've got jobs report, jobless claims report. Any number below 400,000 is okay, honestly. The moving average is, 397,000 now. We were at 800,000, 700,000, and then it just broke right to the 400,000, and it's been doing really well. Honestly, truthfully, it's been really solid. So unless the number's like 485,000, 500,000, and as long as it's anywhere within the 400,000 range, because it's been really good for the last several weeks, it'll be okay even if it's a little off. Although I'm not expecting it. I think jobless claims are declining, thank God, finally in the U.S., and I think this number is going to be right in line. The other 2 reports we have is the PMI Manufacturing Index and the ISM Manufacturing Index. Just to give you some idea of what these reports are, PMI is based on the survey of selected purchaser managers manufacturing, and it's going to give us a good idea of where manufacturing stands and whether there is a uptick or downtick in manufacturing. Then we have the ISM Manufacturing. This is a little bit more important report, and this is the Institute of Supply Management, and what they do is they survey purchase managers of roughly 300 manufacturers to see if orders are going up or down, and it looks like things are fairly stable. So on the manufacturing front, I'm not expecting too much drama. On the construction spending, I'm expecting the number to be through the roof because, boy, oh boy, construction is going crazy. And this temporary inflation that we're seeing doesn't seem to be very temporary, does it? Tomorrow, we've got the big report. We've got the international trades in goods and services. This is going to give us a good understanding of how Chinese economy is impacting U.S. and other countries' factory orders, which will give us a good indication of the ISM manufacturing from a different perspective, and the big employment. How many people are working or playing hooky? But again, the big report today is jobless claims. Look for a number under 400,000. I'm not going to go into momentum levels. As I explained yesterday, we made all-time highs, but there was less than 50% of stocks trading above the 50-day moving average, which means this market is so overbought, and look at the divergence. I mean, this is crazy. Look at this. Higher price, lower price. This is so overbought that the RSI cannot even get to the 70 level. Look at this. We were at the 416. RSI went to 78. We are now at 429, and the RSI can't get past 70. And the reason for that is momentum, momentum, momentum. And I explained it to you the other day. You only have 47% of stocks in the S&P trading above the 50-day moving average. Folks, that's bad. And I'm going to tell you right now, if this number declines further, it's going to be even lower. The bottom line is the market is very, very fragmented right now. Now, what's good about the market, though, if you look at the S&P Cumulative Strength Index, it's fairly spread out. You've got shippers. Remember I told you about this extra space storage just a few days ago? I told you to watch this stock. Applied Materials is still good. Financial companies, energy companies, metal companies, retail companies. I like the fact that it's getting a little broader. As far as new stocks, I love this extra space storage. I think as home sales continue to pick up pace and continue to overheat, we're going to see more upside in these storage spaces, extra storage space companies. I also like Lilly right now, and I like this Waters company, W-A-T. So there's a few stocks that are coming up on this radar that I am liking. Waters, Lilly, I like EXR, I like Applied Materials, and I like L Brands still. Now, I've got 3 stocks for you today that I'm really looking at that I think will do well. I am right now really, really focused on the Russell 2000. I think the Russell 2000 is going to have another leg up before the end of the year. And let me show you something. When the Russell trends, it trends. And it's been congesting. And I think if we can just get above this current level right here, or above this high, the 235 level, and we're at the 230 level right now, I think we could see another breakout. But what I like about this is there's not as much vulnerability in the Russell as I see in the large caps, because you have a lot smaller stocks, so there's a lot less market cap games that are going on right now, where you could have 5 stocks holding up the entire index, where if you look at it internally, you've got less than 50% of the stocks that are bullish. And in the broad market too, by the way, not just on the momentum levels on the stocks, but look at the broad market. This is every stock trading above $50, above $2. Only 49% of stocks are bullish right now. So the market is very fragmented right now. And I've never ever in my life seen momentum levels narrow so much while price is making new highs. That is a recipe for a pullback in the large cap stocks, but that doesn't mean you can't get some upside from these Russell stocks. Now, I want to show you something cool, and I've showed you this before. This is the S&P 500. This is the 6-month average, 3-month average, 1-month average. Look at the top 3 or 4, just at a handful, the top 5, 1, 2, 3, 4, 5. You see 40%, 45 to 40%. Now look at it on the Nasdaq. This is eye-opening. I want you guys to see this, because I could talk, but unless you guys see it, you just don't believe me. Look at the Nasdaq. Top 5, 50%, 45%. So top Nasdaq S&P stocks give us about 50%. But look at the Russell. Let me show you the top Russell stocks. You've got to see this. You've got to see this with your own eyes. If I can only find it, right? The trick is finding it. There it is. So look at the top Russell stocks. The average Russell, and we've been congesting, the average Russell, top five Russell stocks, the S&P, Nasdaq, 50% over 6 months average, Russell's 650%, 400%, 300%, 200%. You see the upside? That's what smaller market cap gives you. Remember, the market cap of these Russell stocks is about $2 billion on average. So I've got 2 stocks that are in the Russell that I'm liking right now. And they don't necessarily have to be in the Russell. They just have to be, the market cap is what you're looking at. So this is 𝗧𝗶𝗺𝗲 Water Technologies. Look at this, nice congestion breaking out right now. RSI couldn't go really too low. If you look at the profile of the stock, you'll see 4 billion market cap, not a lot. 81% return for the year. What did they do? Service industry, refrigeration, provides emission of critical water treatment. Company offers service cycle technology to support customers' full water life cycle. Now, here's the thing about this. Purification of drinking water. Water is going up in price with inflation. A lot more people are getting purified water and treating wastewater than using regular water. Utilities are getting more expensive. So as utilities get more expensive, more people go to this company for value. So I really like the stock. I would give it a, I think the stock is going to break out, and I see it going up to about $40 over the next quarter. And again, it's not really a tech stock, but it's when you're mixing technology with a basic simple material. It's not a basic material, but it's a necessity: water. So again, water treatment, very, very hot right now, especially with the economy heating up and opening back up. Businesses use a lot of repurified water. We use more water during the summer, especially with all this craziness going out in the west, in the northwest region of the country right now. So it's craziness. Another stock, 𝗧𝗴𝗀𝗲, pulling back close to the 50-day moving average. If you look at the profile of the stock, 1 billion market cap. Look at the return, 227%. Shoe company, footwear, not rubber. It's a retailer and wholesaler. What are people doing right now? Getting back out. Consumer staples, consumer discretionary stocks are going out. This operates stores. Famous Footwear, I've been there so many times. They're all over the place. We have one here in the city center. They sell Nike, Skechers. People are going out. Remember the shoe company I was talking about yesterday, Crocs, how it's going up? Well, guess what? They sell Crocs. They sell all of these companies. So people are going out more. They're shopping more. They're buying footwear. And I'm very familiar with this company, and I'm sure you guys have heard of Famous Footwear brand. The stock is going to do well over the next 6 months. Summer still has plenty of time to see more upside. The stock is hot. It's in the right place. It's in the right time. It's at 27. I think we'll go up to the 32 level. Now, I've got something really, really important for you, so don't go anywhere. The stock market is vulnerable now, folks. That's why we're looking at small caps. There are indicators signaling a coming cool down. That's right. Momentum levels are below the 50-day line. I mean, we've got less than 50% of stocks in the S&P trading above the 50-day high, and we're making new highs. That is a vulnerable market. It's getting harder to find new trades that aren't pullbacks or defensive stocks that could rise in the near term. I've been just talking about that for the last 10 minutes. But expert trader 𝗧𝗴𝗀𝗲 is bringing a whole new perspective to trading traditional stocks by sharing his market-moving crypto secret with the public. And remember, crypto does not have correlation to the traditional stock market. So you can have your cake and eat it too without being correlated. Don't be a slave to the stock market right now. Adam believes that there's an event happening soon that will single-handedly launch a new wave of crypto riches. I cannot believe this isn't all over the news and social media yet, but it will be. The key is to find trends that no one is talking about, like I'm talking about small caps right now. The thing is, the more people know about this, the higher prices will go. So make sure to get in on it now before it's too late. Want to learn more about Adam's crypto convergence event? I sure hope so. Click on the link below, learn about the crypto master key, do it now. As always, make sure to like this video. Subscribe to this channel if you're watching on YouTube. And make sure to stay ahead of the market by being notified when I post a new video just like this. And have a great day. And remember, 𝗧𝗴𝗀𝗲, 𝗧𝗴𝗀𝗲, and 𝗏. Talk to you guys tomorrow. It's going to be Friday. Love Fridays. And I'm finally back from Bahamas. Bye, guys.